Well, England lost to Uruguay in the World Cup, and here at TFR we're all absolutely gutted. But help is at hand. JP Quavers from Bank of America Merrill Lynch has popped in to give us a bit of cheer at these sad times and tell us how well the trade's been doing, and particularly trade finance in Latin America. So what can you share with us about some of the trends that have been coming through as a result of the infrastructure build-up for the World Cup?
Well, there's a lot of things going on in Latin America, and I wish I could do something better for you.
Yeah, I do too.
But regarding the trade, basically,
Okay.
there's a lot of activity. I mean, Latin America is still booming.
Yeah.
There was a lot of infrastructure investment in Brazil specifically, with the stadiums, the roads, and everything.
Yeah.
They build it very cautiously because this is going to last forever. Remember that the two previous political governments have developed a lot of people, so they moved more than 15 million people from the poverty into the middle class. So there's a lot of booming momentum in Brazil, and this is going to continue. So after the World Soccer Cup, we're still looking to have a lot of tourism, a lot of people going over there, and the trade is going to continue. I mean, the trade flow is not only south-south, it's also intra-Latin America, and as well going to the north.
So from your perspective at Bank of America, what sort of deals have you been financing?
Oh my God, there's a lot of things. I mean, especially the deals from our core business.
Okay.
Core business are the multinationals, US multinationals, commercials, as well as global multinationals. And we're very into all the financings, not only the trade finance bureau, also the supply chain finance between the region.
Okay, right. So moving slightly beyond Brazil, we've been seeing some of the interest coming in from the Chinese and the FDI going into Brazil. But you were saying to me earlier that there is a wider picture here in terms of Brazil's relationship with Asia Pacific. Could you perhaps tell us a bit more about that?
There are two things. I mean, you have to remember that historically Latin America created a trade bloc, which was the Mercosur, Argentina, Uruguay, Brazil, Paraguay. There was a regional trade corridor, let's put it like that. Now we have a new corridor on the Pacific Rim, and that is Chile, Peru, Colombia, Mexico, which is called the Pacific Alliance, or Alianza del Pacífico in Spanish. It's interesting because the two models are different. Meanwhile, the Mercosur is something more close. That originally was designed for Argentina, Brazil, and Uruguay to play goods around those.
Don't
those
mention
three
Uruguay.
Countries.
We don't like Uruguay.
Oh, sorry about that.
Yeah, bad move.
That country, let's say that country.
Exactly,
And on the other side, on the Pacific Rim, you have the Chile, Peru, Colombia, Mexico, that for the last 10, 20 years, they have been negotiating incredible trade agreements, with all Asia, with Europe, within Latin America, and now what they're creating is an incredible trade corridor the size of Brazil or bigger. So it's interesting for any company that is producing, or whether if you're going to be doing importing and services or exporting services, because you don't have barriers.
What are the typical goods that are going out and coming in that you're saying?
We still have a lot of commodities in the region.
I did wonder this,
But what Mexico is different, because Mexico has manufacturing. Colombia has manufacturing, So more the commodities are in Peru. There's a lot of gold, silver, you name it. The same thing in Chile. Copper is the main thing. But now companies are going into the countries. You mentioned about the Chinese investment. Well, China is investing over there. They're going to start producing stuff. And they're looking on both sides because they're buying in Brazil, but at the same time they're buying in Peru, they're buying in Chile, and they're buying in all the regions. So they're going to be using the two corridors, Atlantic and Pacific.
Do you think there's an inverse relationship between FDI and trade finance opportunities, or do they kind of work together?
Sometimes yes. Normally for the long term. When we see foreign direct investment that is pointing to big projects, like for example Mexico. The last 3-4 months, what we have seen is the majority of the foreign direct invest has been going to Mexico. Why? Because of expectations. Expectations of what? The new legislation in Mexico. They're changing everything. They really want to have a petroleum company similar to Petrobras. So Pemex is going to be opening everything in the country. So they're going to be more supply chain. There are going to be more companies that are going to be their suppliers, and they're going to be integrating the complete chain over there. So it's interesting because it's not only the oil, also it's energy. So a lot of companies from Canada, from Latin America, from Europe, from Asia has been visiting Mexico, and they're betting, so they're investing over there.
Okay. And one of the things I was curious about is the relationship between a bank like yours and the local banks on the sort of correspondent network basis. Can you tell us a bit more about how you're managing those relationships?
Absolutely. I mean, the way that we operate, we have physical presence in several countries. Yeah. So we're in Brazil, Mexico, Colombia, Peru, Chile. In countries where we don't have physical presence, where we don't have a more robust offering, what we do, we have strategic alliances with some of the banks. Yeah. That is fully integrated with our capabilities. Okay. So really our clients, for them, is transparent the operation with that particular bank in the country. Mm-hmm. So they can access through all the channels of Bank of America to that particular bank in a specific country. And on top of that, because we understand that service is something that is critical for any company, what we have is a shared service center that is covering the entire region. Mm-hmm. So we're giving service, technology, implementation, and the channel to all these banks.
Last but not least, I'm just sort of...
not again with the game, please.
Yeah, I'm not going to mention Uruguay. Okay. Oh dear, I just have.
You did it.
Oh dear, oh dear. But if you could cast your mind to the last deal that you've done that you're particularly proud of in that region. Mm-hmm. I know you can't name a client and stuff like that, but generically, what was roughly the type of deal you've done that you look back and you think, wow, that was great?
A couple of things come to my mind. As you say, I cannot mention the names.
No, of course not.
But there was a very interesting operation in Mexico that is going and going and going. It was participation with a European company. We're doing supply chain finance over there. Okay. One of the particularities is supply chain finance that we're doing in local currency in Mexico as well as in dollars. Yeah. So we have both capabilities and we have been working with that. The other one was not a specific trade, because trade is coming now. Yeah. But it was given that we opened the market in Brazil and we established a huge branch in Brazil. Now we're receiving the Asian multinationals over there.
Oh, that's great.
And that was phenomenal.
Great. So thank you very much for coming in to cheer us all up here at TFR. I think this more than makes up for England's defeat. And good luck in all your deals.
Thank you very much.
Bye.
Okay, great.